Good afternoon, ladies and gentlemen, and welcome to the CARES Act webinar. My name is Joe Underreiner. I'm the president of the Kalispell Chamber, and we're pleased to be joined today by Chris Eyler, the Northwest Regional Field Rep for the U.S. Chamber of Commerce. Chris, first of all, I'd like to thank you and your colleagues at the U.S. Chamber for just outstanding work with documentation and the advocacy on behalf of businesses all across the United States and here in Montana. Your staff on the lobbying staff, as well as the Federation staff, have just been outstanding support for all the chambers in Montana, and especially for us here at the Kalispell Chamber. Chris, would like to ask you today to run through your slideshow. Make your presentation, review it, it's outstanding. I think it will be excellent information for everybody here. And then we'll go to some Q&A. But before we do that, I'd like to, if you're members of the press, you should hang up now and call me after this, and we can assist you with documentation and answer your questions. And you can contact me at the Chamber for that. For members of the media, you should hang up and call after this. Okay. Again, Chris, thank you for being available to us. I think your presence on the call today is just a great example of the strength of the Chamber Federation and your work in state and localities like ours. And with that, Chris, thanks for being on the line. I'm going to turn it over to you.
Great. Thank you, Joe. As Joe said, my name is Chris Eyler. I'm the U.S. Chamber's Executive Director for the Northwest region. And I'm going to walk you through quickly the steps that Congress has taken over the past month to respond to the ongoing coronavirus pandemic. Congress has taken three significant legislative steps. First, they passed the Phase 1 bill, which was largely a supplemental appropriations bill to provide funding to agencies to assist in responding to the crisis. The second step, the Phase 2 bill, was the Families First Coronavirus Response Act. I will talk about this briefly at the end of the presentation if time permits, but this law had to do with providing paid sick leave, paid family medical leave, and modifying some of the unemployment rules to help individuals who've been affected by the crisis. The third phase is what I'm going to spend most of my time talking about today. That is the Coronavirus Aid, Relief, and Economic Security Act. Could I get the first, please?
Hold on.
All right, the next slide. Thank you. There you go. Generally, this is a very broad, a true $2 trillion package. It was just under 10% of current GDP. It is intended to be a bridge to help the economy avoid a prolonged down. There's broad agreement that we are going to go through some sort of a recession, but we want to make the impact of that recession as minimal as possible. It's a $2 trillion package, but through leveraging by the Federal Reserve, it can provide up to $4 trillion in support for the economy. It's largely broken down into three significant chunks: aid direct individual taxpayers, aid to businesses, and then miscellaneous cats and dogs, aid to $100 billion in aid to hospitals, $100 billion in aid to states and localities. I'm going to largely focus on what it does for businesses, but just generally what it provides for individual taxpayers. As you've all probably heard in the press, taxpayers who have incomes under $75,000 annually will receive a check for $1,200 per individual. That will gradually phase out after $75,000 and completely phase out at $99,000 per year. For dual or for married couples, you'll get $2,400 for each joint return up to $150,000, and then that will gradually phase out until you hit $198,000 and phase out completely. There's also $500 provided per child. Additionally, it expands broadly the unemployment insurance. As we all saw last week, unemployment initial claims spiked to more than $3 million. or 3 million initial claims. The bill waives most restrictions on eligibility if they are related, if claims are related to COVID-19. So things like actively pursuing work, things like that, they're made much more flexible, and states can award unemployment more quickly and easily than they otherwise would be. Additionally, the federal government will provide an additional $600 per week on top of what's provided by the state. All the states have to do is they must agree to accept this additional $600 payment for the individual. Now, eligibility will expire when the individual can return to work. So if an individual has been laid off or furloughed because of the current crisis, when that company calls for that individual back and return to work, that is when eligibility will end for the enhanced unemployment benefit. And where do you go to get the unemployment benefit? The same as you always would. You go to your state unemployment insurance office. So, next slide, please. So the provisions related to businesses, they kind of break down into 3 categories. Provisions that apply to all employers, provisions that apply to larger employers, and then provisions that apply just to small businesses, self-employed, and independent contractors. That's the most notable program under that category is the Paycheck Protection Program, which I'm going to get to in a second. But I'm going to start with the provisions that apply to all employers. Next slide, please. One of the driving goals of policymakers in the enactment of the CARES Act was to improve liquidity for employers so that they would have the ability to continue to pay their employees through the crisis. So to start with, the bill makes a number of changes to current tax law. The most notable of these is that it delays payment of the employer paid payroll taxes, that 6.2% that employers pay in addition to payroll for their employees to fund Social Security. Employers can delay their portion of payroll taxes from now until January 1st of 2021. And if they elect to delay payment of those payroll taxes, the first 50% of what they delayed doesn't come due until December 31st, 2021. Then the balance of that what is due, the remaining 50% does not come due until December 31st of 2022. Now, there is a caveat here. If employers take advantage of this, they cannot get their loans forgiven under the Paycheck Protection Program, which I will discuss shortly. Additionally, there were other changes made to the tax law. Net operating losses for 2018, 2019, and 2020 can now be carried back 5 years, and this extends to pass-throughs and sole proprietors. If you're a corporation, it accelerates recovery of alternative minimum tax credits, and then it corrects a provision of the 2017 tax law. And if you've made any kind of improvements to a restaurant or retailers in particular, they can now deduct qualified improvement property from their taxes. Again, all of these provisions are intended to give employers more liquidity so that they can pay for their operations and continue paying employees throughout the crisis. Next slide, please. The next provision is the employee retention credit. Now, this is something that hasn't gotten a lot of attention. It was a late addition to the bill. It actually was not in the original bill draft that Senator McConnell introduced just over a week ago. What it does is it provides a tax credit for employers who have either fully or partially shut down or have experienced a 50% drop in gross receipts in the last quarter compared to the prior year. They will be eligible for this credit until gross receipts return to 80% of what they were. It is a refundable tax credit for 50% of wages, which includes employers' healthcare expenses, up to $10,000 per employee. So think of it as a $5,000 tax credit. There are two key caveats to this. The first is employers with more than 100 employees. This applies only to employees not providing services. So if you've laid off employees and they cannot do their work, or if you've idled employees or you've laid off employees and they cannot do their work remotely, only those employees are eligible for the calculation of the credit is based only on those employees who are not providing services during the period. If you have 100 or fewer employees, this applies to all employees paid during that period. And then again, as with other programs created under this bill, if you take advantage of this credit, you're not then eligible to receive a loan forgiveness under the Paycheck Protection Program. Now, recognizing that a lot of employers, there's going to be liquidity issues here and cash flow issues here. Treasury is looking into ways to provide guidance so that there can be an advance made on payment of the credit so that that money can be used to continue paying these employees. Next slide, please. So for midsize and larger employers, the bill creates a $500 billion loan program. $46 billion of this $500 billion is carved out specifically for the airline industry, air cargo carriers, and critical national security businesses. But the remaining $450 billion is reserved for all businesses. It's intended for the Treasury Department to create loan guarantees and support Federal Reserve credit facilities. And this is where, when we say that through the Federal Reserve leveraging, they can provide up to $4 trillion in additional support to the economy. The Federal Reserve typically leverages at a 10-to-1 ratio. So the bill provides $454 billion so that the Fed can create these programs leveraged at 10-to-1. That's where we get $4 trillion. These are pretty much straightforward loans. However, there are restrictions. If you receive one of these loans, there are restrictions placed on stock buybacks during the life of the loan plus 1 year, as well as restrictions on employee compensation. And these loans are largely going to be paid through private sector independent lending financial institutions. You're not going to be going to the Federal Reserve or Treasury to get these loans. These are intended to be guarantees that the Federal Reserve and Treasury provides to financial institutions so that they provide these loans. Next slide, please. All right, so this is the most important, one of the most important parts of the bill. This is the Small Business Payment Protection Program. The Payment Protection Program is a $349 billion loan program where small businesses, and by small businesses, I mean any small business that currently qualifies for programs under the SBA, in addition to 501c3 nonprofits, self-employed, sole proprietors, and independent contractors, as well as restaurants and hotels will be they will be determined eligible on a per location basis. So previously, restaurants and hotels would be based on how many employees they had nationally. Under this program, they will be judged based on a per location basis. So any business that qualifies as into one of those categories can obtain a loan through the Payment Protection Program equal to the lesser of 2.5 months of average payroll up to $10 million. Loans are going to be made by, again, they're going to be made by national lenders and financial organizations. Right now, any financial institution that is currently a SBA 7A qualified financial institution is automatically qualified to make loans under this program. However, we expect in the very near future that Treasury is going to start naming other institutions beyond the 7A institutions that can also make loans. We expect them to be fairly liberal in the types of institutions that they name that will be eligible to make these loans. And as we get those lists of who is eligible to make loans, we will be putting out additional documentation so that businesses know where they can go to obtain these loans. They have also made the requirements to obtain these loans very minimal. There's no collateral required, no personal guarantees. The point here is they want to get money into the hands of small businesses as easily and quickly as possible so that those businesses can continue operating and can continue paying their employees throughout the duration of the crisis. Now, what's unique about these loans that I'm sure you've all heard already is that the loans will convert to grants to the extent that that money has been spent on payroll, rent, interest on mortgages, and utilities for the 8 weeks after origination. This is a dollar for dollar grant. If as you can see, you take out 2.5 months of payroll, you're going to have a little extra money during that 8 weeks, and that additional money you can use to pay, in addition to paying what you would otherwise pay for payroll, you can pay for your rent, your interest on mortgages, and your utilities. And at the end of that 8 weeks, you look back at what you've spent, and to the extent that you've spent it on payroll and those other items, you can have that forgiven or converted to a grant on a dollar for dollar basis. Now, there are some restrictions placed on the amount that can be forgiven. If you have reduced any of your employees during the course of the crisis, the amount that is forgiven is reduced proportionally to the number of employees that you have eliminated. So if you have 10 employees and you've eliminated 2 during this time, then 20%, then the amount that is forgiven would be reduced by 20%. Additionally, loan forgiveness would be reduced if the business were to reduce wages by more than 25%. Now, we often get a lot of questions, between this bill passing and the beginning of the crisis, businesses have already started to lay off employees. How can they avoid that reduction in forgiveness if they've already let people go? Well, the bill allows you to bring employees back on and restore their wages in order to have that loan continue to be forgiven. In order to do this, you have to bring the employees back on within 30 days. And 30 days started on March 27th when the bill passed. If you bring employees back on during this 30-day period and then you keep them on through June 30th, you will be eligible for full forgiveness. Additionally, just going back to what you can obtain the loan on, you can only obtain the loan on the first $100,000 in pay. So employees who make over $100,000, you cannot use the loan funding to pay for any pay above $100,000. Again, the whole point of this program is to incentivize businesses to keep paying their employers, to keep the employee tied to the business throughout the crisis, and to make sure that to help businesses from having their employees have to go on unemployment or other public assistance programs. Next slide, please. Now, obviously, that's a lot to digest. We have created a fairly detailed 4-page document that walks you through each of the steps you need to take to start applying for these loans and the things that you need to start thinking of now before you go to visit with your lender. You can just go to our website, uschamber.com/SB loans. I also believe that Joe has this up on the Kalispell Chamber's website as well. Download this document, take a look. It's a fairly straightforward, fairly intuitive guide to here's what you need to do in terms of here's what's included in payroll costs, here's what's excluded from payroll costs. Here are the types of things that lenders are going to be looking for and they're going to be asking you. The program is set up to be fairly generous. They're basically going to simply ask you for a good faith declaration that your business operations have been adversely impacted by the COVID-19 crisis. Next slide, please. In addition to the Paycheck Protection Program, there is also another SBA loan program that small businesses are eligible for. This is the SBA Economic Injury Disaster Loans Program. This is a program that has been around for quite a while now. It is a program that small businesses often avail themselves of following a hurricane, an earthquake, a tornado, or other natural disaster. It is open to all small businesses and all nonprofits, including faith-based nonprofits, including 501c6 nonprofits with fewer than 500 employees, sole proprietors, and independent contractors. It provides up to $2 million in working capital on a 30-year term at 3.75% interest, and it defers payments for up to a year. Under the CARES Act, the requirements for obtaining the loan have been loosened significantly. Loans are now issued based on credit score with no tax returns immediately required to be produced. You can get up to $200,000 without a personal guarantee. You can get up to $25,000 or less without having to post any collateral. And the collateral requirements have been changed to just require a general security interest versus real estate. SBA is trying to move away from requiring a real estate collateral. The one very big new change is that when you apply for the loan, you can request a $10,000 emergency grant, which must be paid to you within 3 days. This grant does not have to be repaid. Additionally, even if you do not get approved for the loan, you can still keep the grant and not have to pay it. Again, if you obtain this grant, there is an interaction with the Paycheck Protection Program, because oftentimes you're gonna get both. You're gonna get the Economic Injury Disaster Loan, and then you're gonna get a Paycheck Protection Program loan. If you do get the $10,000 emergency grant as part of this loan, that will be counted against what's forgiven under the Paycheck Protection Program. And unlike the Paycheck Protection Program loans, which you go to a lender for, these economic injury disaster loans, you go to sba.gov to apply for. So next slide, please. Now, as I said, in the Phase 2 bill, which was the Families First Coronavirus Response Act, there were provisions made to require businesses to provide paid sick leave for employees impacted by the COVID-19 crisis. So under the Phase 2 bill, employers with less than 500 employers are required to pay 10 days of sick leave if the leave is related to COVID-19. It can be taken because the employee is ill, quarantined due to exposure, to take care of a sick or quarantined family member, or to take care of a child during a school closure. The leave is paid at the employee's regular rate of pay up to a maximum of $511 per day, or $5,110 for the duration of the 10-day leave. However, if the employee is taking the sick leave to care for a family member, then that it's paid at only 2/3 the rate of the maximum of $200 per day. Payment is up to the maximum, is reimbursed by the federal government through a refundable tax credit. We recognize that businesses may not have the liquidity or cash flow to continue paying and while waiting to get that tax credit. So Treasury is taking steps to allow for an advance of that tax credit. Additionally, there is an exception carved out for businesses with less than 50 employees. They may be exempted from having to provide leave related to caring for a child whose school or daycare is closed. But then that is only if providing that leave would threaten the viability of the business. Again, this is something that, we're going to have to look to the Department of Labor guidelines that come out on how they're going to specify which businesses of 50 employees or less can be qualified for this exemption. And then one other restriction is that paid sick leave is not going to be available if that employee can otherwise telework or work from home. So next slide. Lastly, in addition to the paid sick leave, the Phase 2 bill also requires small businesses of 500 or less to provide paid family and medical leave for up to 10 weeks. But this is only if the employee needs to take care of a child due to a school or child care closure. That is the only reason that an employee can claim paid family medical leave under the Phase 2 bill. And then, as you can see on the slide, leave is paid at 2/3 regular pay at a maximum of $200 per day and $10,000 in the aggregate. Like the paid sick leave, businesses are reimbursed through a tax credit, a refundable tax credit. And again, there is an exception made, as there is with paid sick leave, for businesses with 50 employees or less. And again, paid leave is not going to be available if the employee can telework. So next slide, please. So I encourage you all to keep an eye on our website, uschamber.com. We are consistently or pretty regularly posting new and additional documents that help guide you through all of these programs that have been created under the Phase 3 bill. The most recent one is the one titled Coronavirus Emergency Loans Small Business Guide and Checklist, which I referenced earlier. But we also intend to be posting a similar guide for the small business the idle loans that I talked about momentarily ago. We're going to be posting some additional documents on the paid sick leave and paid family medical leave Act provisions of the Phase 2 bill. So again, keep an eye on our website. I will also be distributing those documents as they become available to Joe and his colleagues so that they will be available at the House Bill Chamber. And we also keep an eye on uschamber.com/co. This is our small business specific website. In addition to bill summaries and the documents on applying for these loans, we're also putting up a number of documents about best practices for businesses that are continuing to operate through this crisis. And with that, I'm happy to take any questions.
Okay, thank you, Chris. Well, that is great information. I want to thank you and all of your colleagues in Washington for the material you've been putting it out. And for the listening audience, I want you to know that if you go to kalispellchamber.com, right on the top photo slider, that always opens with the latest directives, business support information, the kinds of programs that Chris has outlined here for you this afternoon. All of that is listed on our landing page for COVID-19. That's updated multiple times a day. We intend to have programs like this weekly, and then with a weekend summary for all of you to be able to review and digest. And so maybe with that, Chris, let's go to some questions. I've got a question from a hotelier, and the question is, one of the reimbursable costs is payment of cash, tip, or equivalent. Do you want to explain what that means?
Yeah, I mean, that basically means exactly what it sounds like. If tips are a part of how you pay your employees, then that is a part of the calculation when you're determining your payroll costs.
Okay. Another question. what if you borrow more money than is required to cover expenses in an 8-week period? Do you pay it back, and over what length of time, and at what interest rate?
So whatever is not forgiven or converted to a grant, then that becomes a loan that you have to pay back over a maximum of 10 years, and it's paid back at a 4% interest rate. And there are no prepayment penalties.
Okay, thanks. How about how is average payroll calculated?
Well, this is a good question for you to use our document for. But for non-seasonal employees, the maximum loan equals 2.5 times the average total monthly payroll costs incurred during the year prior to the loan date. And for businesses that were not operational in 2019, it's 2.5 times the average total monthly payroll costs incurred for January and February of 2020.
Okay. What if you add additional employees during this 8-week period?
Well, going back to my answer to the previous question, the amount you can take out is based on what your payroll was during the previous year. So if you've added employees, you're only going to be able to have forgiven the amount that you took out.
Okay.
And you can't. So, you have to be careful about reducing the amount. So if you have 10 employees and you bring on 2 more, and when you bring on 2 more, you've reduced pay for the other 10 employees. That could work against you.
Mm-hmm.
Does that make sense?
Yeah. Okay. How does the payroll grant work with an officer-owned S corps? Does the employee officer fall in the same category as other employees since they are able to claim unemployment?
So on this one, this is one of those issues that we're going to have to wait and see how Treasury, the guidance that comes out of Treasury on it. Like I said at the outset of the presentation, the bill was very broadly written to give a lot of flexibility to the administrative agencies. So a lot of things like that were not specifically dealt with in the bill, and we're going to have to wait to see the guidance that comes out of Treasury on how an issue like that is handled.
Okay. Another question regarding estimated payroll taxes. Do I still need to pay my quarterly estimated tax by April 15 for the first quarter?
That I do not know. I'm going to have to look into that one.
Okay. If an employee has the ability to telework, but hours are significantly reduced, can employers pay the paid sick leave?
Well, if hours are, so if you take out the loan and you continue paying them based on what they would otherwise work if they had enough work to do, you can still get that amount forgiven. So you wouldn't necessarily want to give them the paid sick leave. You'd want to continue paying them, and then get that converted to a grant at the end of the 8-week period.
Okay. If someone was laid off on March 27th, do they have to be brought back at normal pay through June 30 for full loan forgiveness, or only those laid off after March 27th?
It is actually the date Yes, they have to be brought back on.
Yeah, so they'd have to be brought. The date the loan was, or the bill was passed, was March 27th.
Correct.
Yeah. For the leave, we get a tax credit. does that mean we'll get a credit at year end and we have to pay the employee up front?
That is the way the bill is written. However, in our conversations with the Department of Treasury, they are looking for ways where that credit can be a payment can be advanced. This was one of the things. When the Phase 2 bill was passed, it moved very quickly. We recognize that it's going to be very difficult for businesses that don't have money coming in to pay it, and so that is why Treasury is looking for ways to provide that refundable tax credit as an advance, so you can continue to pay the employee the sick leave.
Okay, all right. Next question. Do independent contractors or self-employed apply for unemployment at montanaworks.gov? That's our state workforce agency, or need to get a loan?
So, well, both. If you're going to apply for unemployment, then you have to go through the state unemployment agency. But independent contractors, self-employed they are made eligible for the Paycheck Protection Program under the bill. So I would go through our checklist and talk to your lender about whether you can obtain the loan.
Okay. 10 weeks pay might be hard to do when our income is cut down so much.
Well, and that is why the loan converts to a grant. If you get 10 weeks pay in a loan, and then you use that money to pay your operating expenses and your payroll, it's converted after 8 weeks. It's converted to a grant.
Yeah. Right. So that effectively is extending that period, since you're reimbursed for that, completely reimbursed as a grant for that initial period. It's going to give you cash flow, which seems like the intent of what Congress and the president are trying to do here. Right.
Again, the government is basically just providing businesses money to keep employees on payroll so that at the end of this, they have a job, but during the course of it, they don't end up on public assistance.
Yeah.
We want to be able to return to normal as quickly and as soon as possible. And the best way to do that is to keep the employee and the employer tied throughout the crisis.
Yeah. How about how do we apply, and when will it be available? I think that's a reference to the payroll protection plan, or maybe the EIDL loans as well.
So the EIDL loans are currently available. You just have to go to SBA.gov and go to the EIDL loan link on their webpage, and you can apply for that now. The Paycheck Protection Program loans, we expect those to be, any day now. Lenders will be able to start making those loans. Like I said, anyone who's currently a 7A qualified lender is automatically made qualified to make loans under this program. The Secretary of the Treasury said yesterday that he expects money to start going out under this program by Friday at the earliest. They are also going to very quickly start naming other financial institutions that can make these loans. So I don't have a specific date for you, but we expect it to be pretty quick. Everything that we've been told is that they want to start pushing money out the door as soon as possible.
Okay. Can you ask only for the 10K grant? I think that's a reference to the SBA disaster loan program again. Yes. Or does it have to be part of a larger loan?
Well, it's if you have applied for a loan under the EIDL program, you can request basically a $10,000 advance on that, which is an emergency grant, and SBA has to provide that $10,000 within 3 days, and it is a grant that does not have to be paid back, even if you are not approved for the loan.
Yes, right.
Yeah. So it doesn't have to be a part of a bigger loan. But I can't think of a scenario where you wouldn't need more money than that.
Right. Okay. We've got a few minutes for a couple additional questions. And the next one is, does the payroll, or do the payroll grants apply, so that's a payroll protection program, apply to a C6, a business and professional association, like a chamber or a realtor association?
No, they do not. The only nonprofits that are eligible are 501c3s and then 501c19s, which are veterans organizations.
Okay.
But C6s are not. However, C6s are eligible for EIDL loans.
Yes, right. Good point. And also then are able to access all of the enhanced unemployment benefit programs for any laid off employees as well.
Mm-hmm.
Now to a director of a nonprofit here. Will you please go over the Paycheck Protection Program one more time? And are these loans eligible to be forgiven only if you match this amount with additional payroll, rent, utilities on a one-time basis?
So, just in a nutshell, you can obtain a loan from SBA or from an SBA qualified loan lender under the Paycheck Protection Program for 2.5 times your average payroll, up to $10 million. After that money, if you use that money for payroll costs, interest on mortgage obligations incurred in the ordinary course of business, rent on a leasing agreement, payments on utilities, and for borrowers with tipped employees, additional wages paid to those employees. At the end of 8 weeks after the loan origination, that amount can be converted to a grant. It is a one-time program. This is not something that's going to go on indefinitely. I believe the program sunsets at the end of the year. I'd have to double check the statute on that. But
yeah, I think you're right on that, Chris. While we're on that topic, circling back to that, what about how are part-time employees, treated in that formula you just described?
So if your average payroll includes part-time employees, they are taken into consideration in that calculation.
Yeah. Okay. Let's see. On payroll protection, read the amount forgiven is based on average wages from 2019. What if an employer was just hired in January?
Let me. I'm not 100% sure on that.
Yeah, okay. We'll work on getting an answer to that question, to that questioner there.
Okay.
Yeah, go ahead, Chris.
Nice. Okay.
Yeah. Are the funds for payroll and the funds for rent utilities different loans?
No, it's the same loan.
No, yeah. Let's see. Do we know when the local banks will have information? I think we answered that. Really, they're trying to push it out as soon as possible. Chris, won't the first thing we hear about that will be the list of eligible banks? But I can say for all of our listeners here, we're expecting that to be virtually every financial institution in the Flathead Valley that's FDIC insured.
Yeah, they're going to be pretty liberal in what they do to determine lenders.
Yeah. Let's see. What if we hired an employee that was not on last year's taxes? We've already answered that. Can you clarify the interaction with the SBA $10,000 grant and the payroll protection program?
Yeah.
Maybe we should reiterate that because you addressed that in your remarks, how that impacts the payroll protection program. Chris, why don't you reiterate that?
So if you do get the grant, which again, it's a grant, so it doesn't have to be paid back, that $10,000 will be subtracted from whatever amount is going to be forgiven under the Paycheck Protection Program loan.
Yeah. Thanks for covering that again, reiterating that. Another question with the payroll protection program, if I need to close the business for a period of time, is it in my best interest to keep employees on at full payroll versus furloughing them? Will the grant apply?
Yes, if you keep paying payroll with the loan money, then the amount that you have used to pay employees during that period of time is going to be converted to a grant. And just remember, it's only the first per employee, so it will only pay the first $100,000 of that employee's salary. So anything over $100,000 in salary for an employee, that is not forgivable.
Yes, and that's the goal, to keep these employees attached to the business, so as things do turn, they can ramp right up again.
Right, and it's targeted at middle income employees.
Okay, is new incentive compensation to retain staff during this time included?
That I do not know.
Yeah.
It is
good
not.
Question.
It's not in the checklist of things that we have, but
yes. Okay, that's a
good
one. We'll flag that one for follow up. Okay. Let's see. I know you've got to be off in 2 minutes. Let's go to one question and then we'll close. Final question here: if the EIDL grant of $10,000 is used for business expense related to COVID, but not an expense that qualifies for the payroll protection loan, is that fine?
Yes. You can't use the $10,000 for something that you're going to use the payment protection program money for. In other words, you can't double dip.
Yes. Yeah, so I see we've got another question of commission-based or incentive-based pay. We'll work on getting an answer to that. But I do want to cover this final question for you, Chris, which we have a lot of here, and that relates to how seasonal employees are defined and treated in the payroll protection.
So on seasonal employees, the loan for season, if you have seasonal employees, and the calculation is 2.5 times the average total monthly payments for payroll costs for the 12-week period beginning February 15th, 2019 or March 1st, 2019, decided by the loan recipient and ending June 30th, 2019.
All right. Well, we need to get you on your way, Chris. We sure appreciate you being available to us and to the listening audience. We're capturing these questions, so we'll work on getting answers to some of the ones, especially around incentive or commission pay and how that's impacted. We'll be getting out to you the list of financial institutions that are approved. Again, we're expecting that to be virtually every FDIC insured institution in the Valley. Look for more information on future programs. Because there's so many questions around unemployment, we're expecting to do about this time next week, something with, on the whole, managing employee attached furlough programs and how that works, how those applications can be directed in how you can support that as an employer. And so with that, Chris, thanks again.
Thank you, Joe.
We'll follow up with you and may have you back again in the future if you're willing to join us again as this develops. And this has been fully recorded, and look for additional information on how you can access that and refer that to key personnel in your organization. With that, we'll sign off, and we look forward to having you join us again in the future.
Thank you, Joe.